welcome to etinsight, where we get you a 360-degree view of the big picture in business and economy. I'm Sridhar Ramakrishnan, and here's what we have for you on the show today. Greed, ambition, or edge-of-seat excitement? What is it that lures respectable executives into a life of crime? How can India Inc. protect itself from frauds, and what is it doing about it? And how the news is tightening on white-collar criminals despite the leniency in laws. Our top story first. When a car gets stolen in a neighborhood, the news makes it to the city pages of the local newspapers. But when highly paid, highly skilled employees commit crimes within their own organizations, the news is often hushed up. Unless, of course, the media gets wind of it or someone complains. Like it happened in the case of Citibank, where a relationship manager, Shivraj Puri, is said to have defrauded his clients of 400 crore rupees. So what is it that drives well-paid and well-educated workers to cheat and steal? Lakshmi Subramanian gets you the story.
2 months ago, IPAC touting Shivraj Puri had a high-profile, well-paying job at Citibank's Gurgaon branch. His job was to rope in high-net-worth clients for the bank and manage their investments. But an internal inquiry opened a Pandora's box for the bank. Puri, as it turns out, was taking advantage of the clients' faith in him and helping himself to their savings accounts and making investments that were not authorized by the bank. Puri's modus operandi was simple. In the pretext of assuring his clients high returns, he would move money from their accounts into his own accounts with brokerages and invest them in high-risk stock market trades. That's not all. Puri also forged SEBI documents and the bank's letterhead to mislead clients. After the scam broke, furious clients filed complaints with the Gurgaon police, naming even Citibank's top bosses in New York, such as Vikram Pandit, in the complaints. That's the damage just one rogue employee can cause to an employer's reputation and financials. So what is it that lures these apparently bright white-collar workers into crime?
The commercial aspects of every transaction takes over ethics. Today, if there is a guy who is a top-performing relationship manager in any organization, brings in a host of revenue, brings in 10-15% of a revenue, you are willing to put up with anything that he does.
The checks and balance, particularly in the banking sector, are better than they've ever been. But crimes have been rising nevertheless. According to the Ministry of Finance, between April and June last year, public sector banks registered 865 frauds worth 358.3 crore rupees. Private sector banks saw 2,797 cases worth 74.08 crore rupees, and foreign banks had 4,630 cases worth 439.42 crore rupees. A year-on-year comparison shows that while the number of frauds has come down, the value of fraud committed has increased in public sector banks. It is reverse in the case of private sector banks. And foreign banks have seen both the number of frauds and the value of frauds rise. Sure, not all these frauds were perpetrated by the bank's employees. Their borrowers took them for a ride as well. But interestingly enough, according to an RTI query, 252 employees of 11 PSU banks helped fraudsters withdraw huge sums of money through fictitious methods between 2005 and 2010. The big question now is whether the technology-savvy banking system can control these frauds.
Certain amount of fraud you can expect to see. A fraud which is too large or systemic is bad. But when they are greedy individuals, when they are impoverished individuals, it has been there across centuries, it will continue.
But it's not just banks. Corporate India as a whole has been battling with rising frauds.
Wherever there are violations that has happened, we have taken tougher actions. There has been cases of separation of people, there has been cases of a lot of punishments and warnings, stern warnings that has been given wherever we have seen people borderline getting into those kind of cases that we have observed. Because at the end of the day, when you have a visibility of the tougher action, that itself is a good counter to be able to deal with these particular issues.
Last year, an employee in Wipro's finance department allegedly defrauded the company of 18 crore rupees. Similarly, an employee of Godrej Consumer Products faced charges of embezzlement after allegedly placing fake orders for gold coins worth 25 crore rupees in the firm's name for his personal benefit. In 2010, more than 3,000 crore rupees were allegedly collected by promoters of a fake company called City Limousines. And who can forget the all-too-famous case of Ramalinga Raju, who defrauded Satyam of $1 billion.
there has been a distinct increase in the amount of white-collar crimes in corporates or in the financial sector. And probably the reasons could be that there is much more opportunity, but there has been so much of economic prosperity in India in the last 10-15 years. We have a booming stock market, real estate has gone through the roof. So the incentives are there for more of these to take place.
But it's not just the value of frauds that has risen. The modus operandi is now becoming more and more complex. According to a KPMG survey on 1,000 companies, respondents said that they saw most frauds on account of diversion or theft of funds or goods through false invoicing, false claims and pilferage. Bribery and corruption come next in line, followed by e-commerce and computer-related frauds, regulatory non-compliance, financial statement frauds, IP frauds, corporate espionage and money laundering. The report says that over 75% of all fraudulent activities except intellectual property fraud were perpetrated by employees, reaffirming that the enemy within poses the highest risk. Among employees, non-management employees are perceived to pose higher risk than management employees. More than 50% of the respondents indicate that non-management employees were involved in most of the fraudulent activities. However, financial statement fraud and regulatory non-compliance are typically attributed to the management cadre. External parties such as customers, vendors and business associates are perceived to pose the highest risk in areas such as e-commerce and computer-related fraud, bribery and corruption and IP fraud.
Businesses themselves are becoming larger and more complex, so when a fraud happens, its coverage is much more. The second part is around that I think so is just the way the frauds are done, the technology used and everything else, so it just tends to become much larger.
That's why it is important to analyze why frauds are rising. Inadequate controls and compliance is a key factor contributing to rising frauds. Next in line is diminishing ethical values, failure of managers and department heads to act on deviation from set rules, a lack of framework for monitoring and enforcing compliance, inadequate background checks on employees and vendors, inadequate utilization of technology tools to identify red flags, and senior management overriding controls.
In most of the cases where white-collar crime takes place, there is a sense of increased pressure.
Basically, it is greed and wanting to make a quick buck. That's one of the reasons.
To be able to rise up, you either need a lot of power or a lot of money. And once you have that, then people start masking your means.
That's not all. 75% of the respondents in KPMG's survey believe that frauds in India have increased in the last 2 years. 54% believe that white-collar crimes have increased in their industry, and 45% believe that white-collar offences have increased within their organisation. And 87% of the respondents stated that their organisation had incurred fraud losses of more than 1 million rupees, as against 47% in the last survey done in 2008. No prizes for guessing that perception of risk is highest in the financial services sector, followed by FMCG, information communication and entertainment industries, and real estate and infrastructure. The survey revealed that only 35% of the respondents took legal action upon detecting a crime within their organization. And even if legal action is taken, it can take years for a conviction.
If a case is going to be decided in 20 years or 10 years, then it really does not deter fraud. Because I know for the next, I'm going to be in jail for, 60 days, 90 days maximum, then I'll get a bail. And then I'm free to enjoy my ill-gotten wealth.
That is the biggest reason why some employees don't shy away from turning towards white-collar crime.
And why should they, considering that they can make big money rather quickly and get away with it if they are caught? To stop that from happening, India needs to strengthen its regulations and companies need to show zero tolerance for the smallest fraud.
But are Indian companies doing that? We'll find out after this short break. Stay with us.